Hey my dear students, hope you guys are all doing good. Hope you guys are all perfectly fine. So in this video, I'll be taking you through quickly throughout the content of RTP for CA final audit, which has been released for September 2025 attempt. See, as I always insist, before you go for the examination, you should definitely have a look at the RTPs and MTPs. So both RTPs and MTPs, you have to compulsorily refer before you go for the examination. So in that attempt, in order to help the students to give a quick overview of the entire RTPs and MTPs. So first I'm starting my discussion with the RTP. So in this, I will try to thoroughly cover all the important aspects of this RTP for the September 2025 attempt. Right. So having said that, first we will directly hit the MCQs part. So MCQ, we have a very interesting case scenario based MCQ here. Let us try to have a look at it. So first integrated case scenario, let me take you through the facts. As and when I take you through the facts, I will try to explain the related case scenario MCQ also from that portion itself. So B&M and Associates Chartered Accountants are in the completion phase of the statutory audit. Okay, so there is an audit firm, B&M and Associates. They are almost at the completion phase of the statutory audit of an entity FES Limited, which is a technology company for the financial year 31st of March 2025. Perfect. Before concluding the audit, there was a difference of opinion between the audit committee and the auditors of which among the following matters are the areas which the auditor should take into account to determine the key audit matter as per SA 710. So the auditor has found a few matters. So there was a difference of opinion between the audit committee and the auditor of this entity, which matter should be considered as a key audit matter or which matter should not be considered as a key audit matter. Or if I put it in the other way around, what should be taken into account to determine the key audit matter. So like that, on that aspect, a difference of opinion is there and three facts they have given. So out of that, we need to choose which matters can be selected as a key audit matter. Out of these three, which is one of the factor for considering it as a key audit matter, which is not a factor to be considered as a key audit matter, that we have to understand it. So guys, if you remember SA 701, when we had a discussion, so there we have seen one paragraph. What are the factors that auditor will consider while determining or while deciding whether a matter is a key audit matter? What are the factors which auditor has to consider while deciding whether a matter is a key audit matter or not? In taking that decision, what are the factors which auditor will consider? Three factors auditor will consider. Number one, areas where there is a high risk of material misstatement. So wherever there is a high risk of material misstatement, there he will consider that factor he will consider while determining key audit matter. Number two, those areas where significant judgments are involved. Number three, any significant events or transactions which have taken place during the year. So these are the three factors which you have to take into account. The areas where there is a high risk of material misstatement, areas where significant judgments are involved, and significant events or transactions which have taken place. So now they talk about three things. Number one, during the last quarter of the year, company's income was significantly affected by fluctuations in forex rates with inadequate hedging arrangements. The auditor has to evaluate the impact of these transactions on the financial statements. So what is the first thing they are trying to say here? So during the last quarter of the year, company's income was significantly affected by fluctuations in foreign exchange rates. So during the current year, forex rates have gone major changes, which was heavily affected. So it is one of the significant event or transaction which has taken place during the current year. And it is also something relating to the audit of the financial statements. So don't you think this is one of the matter which can be highlighted as a key audit matter? Yes. Why? Because as I have told, one of the factor which has to be taken into account, significant events or matters which have taken place. So there is a significant impact on the forex rates. So this he wanted to explain it on as a key audit matter. Can he do it? Yes. Yes, number one is a key audit matter. It was observed that server maintenance of the company was likely prone to external access, which was an area of high risk as assessed and reported by the management's expert committee. See, now you might say that this is an area where there is a risk of material misstatement, where there is a high risk. No, this also I will consider it as a key audit matter. But no, guys, if you pay close attention here, key audit matters are those matters which auditor has considered significant while conducting audit of the financial statements, right? So here what they are telling, there was a problem in the server maintenance work of the company. Server maintenance, they are not talking something relating to the financial statements aspect. No, it is not something which is relating to financial statements aspect. So it was observed that server maintenance work of the company was likely prone to external access, which was an area of high risk assessed and reported by the management's expert committee. Okay, this is a high risk area, but it is a high risk area related to operations. It has nothing to do with the financial statements of the company. It has nothing to deal with the financial statements of the entity. So that's why even though this is a high risk area, but it is not something which auditor will be considered significant while conducting audit of the financial statements. So that's why this might not be a key audit matter. Why? Because it has nothing relating to the financial statements. And the auditor has third aspect. The auditor has to make judgments in areas where management of the company also use significant judgments. One key point was that the company depended heavily on the few major clients, while management believed that market of the company was growing and would bring in more new clients. The auditor had to carefully consider these differences in view while reviewing the financial statements. So this is one such area where there is a significant judgments involved. So management is saying that in the coming 1 year, in the coming duration, the market is going to expand, but auditor is having a different view. Now they both have discussed, and finally auditor has sorted out that differences. Why there is a difference in this area is because this is one such area where huge judgments will be involved regarding the future. So this is an area related to the financial statements also where significant judgments are involved. Can that be considered as a key audit matter? Yes, that can also be considered as a key audit matter. Perfect, everyone. So 1 and 3. So if you see here, first question, as per SA 701, communicating key audit matters in the auditor's report, which of the above mentioned areas should the committee and auditor consider while determining the key audit matter? So what and all should be considered? As I have told, 1 and 3 both should be considered as a key audit matter. Second is not. Why not? Why? Because it is not something which is relating to the financial statements. So if you look at the key here, if you look at the answer here, yes. So if you see, the first option is A. Next, let us proceed further with the facts given in the case scenario. Yes. Following discussions, a mutual understanding was reached and the audit of the FES Limited was concluded smoothly. Very good. Subsequently, B&M and Associates came to know about a tender floated by the Dwarka Municipal Corporation for computerization of its records. So there was a government, from the government there was a tender. That tender was for computerization of records, which is not just reserved for chartered accountants. No. So computerization of records is not an area of work which is open for only chartered accountants. Anybody can do it, right? Requiring an earnest deposit of 85,000 rupees. So you tell me, can this given firm respond to this tender? So if you go back to the professional ethics chapter, when it comes to tenders, we have told that in case of tenders, we need to see first, is the tender, is the work is reserved only for chartered accountants? If it is reserved only for chartered accountants, you can't respond it unless minimum fees has been quoted there. On the other hand, if it is not just reserved for chartered accountants, then you can respond to that tender even if the minimum amount is not mentioned there. So since this is the scope of work, since the scope of work of the tender is something which is not exclusively reserved for chartered accountants, yes, you can respond to that tender. Sir, can they make earnest money deposit? Yes. Sir, if they are making earnest money deposit, will it be deemed as sharing the proceeds with another person, and will you be deemed to be guilty of professional misconduct? No. Earnest money deposit is considered as valid. That will not make you professionally misconduct. This we had an elaborated discussion in the professional ethics chapter. More or less the same point they try to say here. So if the chartered accountant has responded back to this tender, and even if he made the earnest deposit for getting this project, will he be deemed to be guilty of professional misconduct? No. B&M Associates has one of its partners residing in Dwarka. Hence, he persuaded the firm to apply for the tender and paid the earnest deposit. However, another partner of the firm was of the view that such an act would lead to professional misconduct and insisted on withdrawing the tender application. The firm decided to approach an experienced CA before withdrawing the tender application and went on focusing the other assignments. So now if you have a look at the question from this, assuming the role of the auditor of Cash Limited, based on the above observations, no, this is not the question. This is relating to another fact. Tender related question will be there. Yeah, this one. Is there any professional misconduct involved in the submission of municipality tender application by B&M and Associates under the Chartered Accountants Act? So by responding to that tender, to that digitization of records, is there any professional misconduct? The answer is no here. In the first option, they say yes, no, it is straight away wrong. Why? Because there is no professional misconduct. Second option, they say no, yes, it is not a professional misconduct. As per the guidelines under the Act, a member can respond to any tender where the matters relates to anything other than audit. Very good. Further, members can even make the earnest deposit also in respect of a non-exclusive area for chartered accountants. Option C say yes, which is straight away wrong. Option D also says no, but let us have a look at the reasoning. Option D says there is no professional misconduct. As per guidelines under the Act, a member can respond to any tender which is required by state government, central government. Absolutely not. It is nowhere stated something like this. They have only stated that if you want to respond to a tender, you can do it provided the work is not reserved for a chartered accountant. They did not say somewhere saying that you can't respond to a tender where it is, you can respond to a tender always when it is central government, state government, something like that. They did not say it. It can be done by anybody. Okay, right. Next, coming to the next thing. Yeah, let us have a look at the next few facts. BNM Associates also commenced the statutory audit of Cash Limited, a banking company headquartered in Delhi, headquartered in India. So they are conducting an audit of Cash Limited, which is a banking company. During the audit, the following observations were made. What are they? The staff and officers of the bank were frequently transferred from one position to another without prior notice. So what is that we call it? That we call it as a rotation of employees. Is it a valid internal control? Yes. If you want to have strong operations in the banks, you need to rotate the employees, the job positions, that too without any prior intimation. So by transferring the jobs from one position to another, even without prior notice, has the bank done something invalid? No, they are doing it in a very appropriate manner. This is a very strong internal control. This is very good. Next, cash was test checked daily and counted in full occasionally by another officer of the bank apart from the cashier. Excellent internal control. So it was test checked daily and also occasionally full cash they are checking, that too not by cashier, some other person. Very good. This is also an excellent internal control system. Physical custody was solely maintained by senior most officer at the branch. One of the most important point here there is a huge lapse. Why? Because if you see the audit of the banks, even in the marathon also I have covered, one of the first and foremost internal control which they say in the area of cash is cash should always be kept in joint custody of two responsible officers. But here they are telling the custody was kept only in the possession of one person. But as per the Banking Regulation Act, or even as per the general guidelines also, in case of the bank, cash should be kept under joint custody of two responsible officers. But here they are keeping the entire cash in the custody of one single person, which is also a violation there. Unpaid checks received through outward clearing were securely stored. No, this is also not a correct internal control. If you have any outward checks for which the amount was not yet paid, you should not securely store it. You have to send it back to the responsible customer. You have to send it back to the customer. Sir, you gave the check, we sent it for collecting, but we did not get the payment. So please come and collect your check back. Either they have to intimate the customer to come and collect it, or they have to send it to the customer directly. So they can't keep it in a bank's locker. So 1 and 2 are strong internal controls, whereas the 3 and 4 are inappropriate internal controls. So if you see here, assuming the role of auditor of Cash Limited, based on the above observation, which aspects would you report as control failures and what would be your rationale for considering them as such? As I have told, 3 and 4, that will be the violation. Cash should always be maintained under joint custody of two authorized officers, as entrusting it to a single individual poses a significant control risk. Additionally, any unpaid checks returned during outward clearances should either be dispatched to the customers at their recorded addresses, or customers should be appropriately notified to collect them from the bank. So these two are inappropriate controls. So option is D here. Second one option is second, and one more question also we have done. No, fifth one is C. Okay, anyhow, you can cross verify with the key. Now let us come to the next part. Now the question, yeah. After a detailed discussion and review of internal controls and practices, the firm finalized and issued the audit report. Perfect. CAM, a partner at BNM and Associates, firmly believed that one should always pursue their passion regardless of their profession or business. Okay. Driven by his belief, he engaged in the following activities beyond his chartered accountancy practice. So apart from doing the chartered accountant practice, he has also engaged in some activities. So as we all know that we have clause 11, which says that if you are a chartered accountant in practice, you should not engage in any other activity. However, some activities are generally permitted. For some activities, you have to take specific permission. Without taking the permission, if you are doing that activities, you will be deemed to be guilty of professional misconduct under clause 11, part 1 of the schedule 1, first schedule. So let us see what activities he is doing. Part-time employment with a non-profit organization based in Noida, permitted or specific permission required? Specific permission will be required. It is not generally permitted. If you are under employment of another audit firm, that is permitted. But here he is in a part-time employment with a non-profit organization, not permitted, not generally permitted. Specific permission will be required. Involved in agricultural activities on his personally owned agricultural land located outside Bangalore. This is generally permitted. So owning an agricultural land and carrying out agriculture, generally permitted. No need to take any permission. Tutorship as a part-time faculty under a private education institution, not permitted. You need specific permission. Why? Because you can be a part-time tutorship under institute. If you want to take a part-time tutorship at a private educational institution in Chennai, you need to take a specific permission. So for this also prohibited. Holding an honorary office leadership in a charitable educational organization in Trivandrum. This is permitted. You can hold a honorary position in non-profit organizations or NGOs, charitable institutions, etc. This is generally permitted. So you tell me he has done two activities for which a specific permission is required. That means without getting the permission, he has done these two activities. Will he be deemed to be guilty of professional misconduct? Yes. Under which clause? Clause 11 of the part 1 of the first schedule. So if you see the questions here, among the various passion-driven activities undertaken by CAM, as discussed in the case, which of these are generally permitted? So you tell me which of them are generally permitted. So this investing in the agricultural land and carrying out agricultural activity and holding a honorary leadership, 2 and 4 are permitted. According to the provisions of the Chartered Accountants Act 1949, under which clause would CAM be guilty of professional misconduct? So as we have already discussed, clause 11 of the part 1 of the first schedule, he will be deemed to be guilty of professional misconduct. Next, let us have a look at the next few questions. During the audit of Tripti Chemicals Limited, the auditors Dishu and Co identified unusual fluctuations in revenue while performing the analytical review procedures. Okay, they found unusual fluctuations. They performed analytical procedures by doing the revenue comparison. They find huge deviations were there. Upon further inquiry, they detected a misstatement in revenue recognition, which appeared to have been intentionally made by the senior finance personnel. So while analyzing this, they came to know that there is a misstatement and they are feeling that it is somewhat intentional. They did not conclude it. Prima facie, it is appearing that it has been intentionally conducted. It is not something an error. They're suspicious that they might have conducted intentionally. All the management contended it was a one-time error. The auditor suspected of potential fraud. In accordance with the standards on auditing, what would be the most appropriate course of action? Now you tell me which standard they are talking about. SEP'25 they are talking about. So you found a misstatement which you feel that, which you are suspecting that there is a fraud there. So as per SEP'240, what you are supposed to do? If you have a look at the options, rely on management's assurance and proceed with issuing unmodified opinion. Will you directly blindly believe the management's statements and give unmodified opinion? Definitely not. Perform additional analytical procedures only if the misstatement is material. No, whether misstatement is material or not, you need to investigate it further. See, this is the correct option here. Evaluate whether misstatement indicates fraud, assess the risk of material misstatement due to fraud, consider implications for audit evidence, and even management representations. All this you have to do. So since you suspect a fraud, you evaluate whether there is a fraud, analyze it, assess what will be the impact of that mistake, what will be the impact on risk of material misstatement, what impact it will, evaluate the evidences, and even evaluate the genuineness of the management representation. Immediately withdraw from engagement. No, this is extreme step. You need not do that. You can do C here. Next one. VMC and Co, a firm of chartered accountants, has been auditing the financial statements of Riox Limited, a listed company, for the past 10 years. Okay. CA Rajat, an engagement partner, has led the audit team throughout this period. From the last 10 years, they have been conducting the audit. A recent quality control review was raised concerns regarding a familiarity threat, as CA Rajat has developed a close relationship with the key management personnel of the client. Because of the long duration of the relationship, he developed a close association. Which of the following would be the most appropriate course of action for VMC and Co to mitigate the threat of independence and objectivity? So in order to reduce that familiarity threat, what they are supposed to do? Number one, continue with the same engagement partner? No. Why? Because the engagement partner has developed close association with the client. You can't continue with the same engagement partner. Appointing a second partner to assist CA Rajat, but allow him to continue. No, you can't allow him to continue as a lead engagement partner. Rotate the engagement partner and appoint another qualified partner to lead the audit engagement. Yes, this can reduce the familiarity threat to some extent. Request Riox Limited to change their finance team. We can't say it. You can't say that, hey, you change your finance team because there is a familiarity threat. We can't say that. As an auditor, it is our responsibility to remain independent, to avoid all kind of threats. So that's why it is our responsibility to rotate the engagement partner. Next, while conducting the statutory audit of large manufacturing company with multiple warehouses, that too in remote locations, the audit team faced challenges in performing physical stock counts. Due to logistical constraints, the team decided to adopt an emerging technology that uses sensors, high resolution cameras to carry out inventory verification without being physically present. So you want to do physical verification, but you don't want to do physically there. You want to use some device to which you will attach a camera to which you will attach some scanner kind of code scanners and all, and you wanted to verify the stock. How you can do it? By using the drones. So you can fly the drones. To the drones you can attach the cameras, and with that drones you can carry out the physical verification. This emerging technology, what do we call it? Drone technology we call it. Clear? So this is the MCQ part. Now let us have a look at the descriptive part. First we have some question from quality control. Let us see. SDC and Associates, a medium-sized audit firm, is appointed as an auditor of Neuronix Limited, a listed pharmaceutical company which is engaged in extensive R&D with complex global operations. CA Rashi, an engagement partner of SDC and Associates, is leading the audit team for the audit of the same. That means she is an engagement partner. Neuronix Limited was earlier audited by a Big Four firm that withdrew from the engagement citing scope limitation. The previous year auditor has resigned because of restriction of their scope. During the audit planning, CA Rashi realizes that while her team is skilled in standard manufacturing audits, they lack experience in pharma R&D and associate regulatory framework. Lack of expertise, capability issues are there. Here auditor, before accepting the engagement itself, they should have decided it whether they are compatible, whether they are capable enough to complete the audit or not. So here they clearly say that they conducted audit of various manufacturing entities, but they don't have expertise in pharma industry. Next, the firm is under pressure to complete the audit in time to meet the listing obligation of Neuronix Limited. The managing partner insists on continuing the audit and advises CA Rashi to rely on the firm's standard procedure to ensure timely delivery. In light of SQC1 and SA220, analyze the quality control considerations. CA Rashi must evaluate before continuing with the engagement. What action should she take up to uphold the audit quality and professional standards? So as we all are aware, even SQC1 also says before taking a decision whether to continue or accept the client relationship, few factors we have to consider. The few factors are: number one, integrity we have to consider, and competence of the engagement team, and capability with the ethical requirements. This SQC1 says. SA220 says one more aspect. Along with these three, you should also consider significant matters which have arisen during the previous course of audit. So here mostly they are talking about this competence. So before accepting the audit, they need to check the capabilities, competence, the time and resources to complete the engagement. So in this matter, what specifically we will see: whether firm is having relevant knowledge of the industries, whether they have relevant experience, whether they have enough of staff, experts are available if needed, and whether individuals are meeting eligible criteria to do engagement quality control review. Why? Because for a listed company, engagement quality control review will be mandatory. So you need to have an engagement quality control reviewer in your firm, and whether the firm would be able to complete the audit within the reporting deadline or not. So these are factors you have to consider. And the same thing they say as per SA221 also, before accepting or continuing a client relationship, you should check the integrity of the client, you should check your capabilities, you should check the compliance with ethical requirements, and as I have told, one more extra matter will come: significant matters which have arisen during previous audit engagements. So in the given case, so what Rashi should do? CA Rashi must not proceed with the engagement unless satisfied that conditions under SQC1 and SA220 are met. Number one, you have to address the firm capability and consider engagement experts. First, you have to evaluate whether the firm is capable enough or not. And they told previous auditor has withdrawn. Understand the reasons why the previous auditor has withdrawn from the engagement, and also make sure that you are having a qualified engagement quality control reviewer. Why? Because your client is a listed company. So unless you are satisfied with all this, you should not accept the engagement. This is what you are required to do as per SQC1 and SA220. So as I was saying, always from quality control chapter, there will be a compulsory question, small chapter, very important chapter from the examination perspective. So please do refer to it before you go for the examination. Next, coming to the next question. Kavya has been appointed as a statutory auditor of XYR Infratech Limited for the financial year 2024-25. The company operates in two business segments: consumer electronics and also infrastructure development. The infrastructure division has been reporting losses in the past 2 years due to delays and cost overruns. So their consumer electronic division was a profit-making entity. It is earning stable profits, whereas this infrastructure development division, it is continuously making losses. While planning the audit, CA Kavya needs to determine materiality for the financial statements as a whole. She seeks guidance on the factors that may affect the identification of appropriate benchmark. SA 320, what are the various factors which affect the benchmark? Like any element can be taken as a benchmark. You can take any, it depends on the applicable financial reporting framework. It depends on the information needs. It also depends on volatility of the benchmark. right? And the benchmarks that may be applied. So first you have to write what are all the factors which affect the decision regarding which benchmark has to be chosen. You have to write that factors from SE 320. And also they are asking what benchmarks may be applied to each division. In the given case, what benchmark you will apply. See, in the consumer electronics, since there is a stable profit, what we can do is for the consumer electronic division, we can take profit as a benchmark. Why? Because it is less volatile. The profits are stable. Whereas when it comes to infrastructure division, there we can't take profits as a benchmark. Why? Because the company is a loss making company. Instead of that, we can take revenue as a benchmark. Revenue could be an appropriate benchmark. So even that also they are asking what are the benchmarks that may be applied in the given case or to each division. That benchmarks also you are required to write it here. Next, reporting. Harsh Electronics Limited, a manufacturing company, planned to set up a new R&D center at its existing industrial premises in Pune to mark its 25th anniversary in the financial year 24-25. To expand the premises, the company decided to acquire an adjacent plot of land owned by Miss Reena, an executive director of the company. So company is there, adjacent to that one piece of land is there, company wants to acquire it, but that land is held by one of their directors only. The company offered to exchange one of its underutilized land parcels located in another industrial area rather than having a cash transaction. So what the company told is they want to take this land, but in return they don't want to pay cash consideration. This company is having one more piece of land in another area. They want to give this land to Ms. Reena and acquire this land adjacent to the company. Non-cash transaction with the director. It is a non-cash transaction. Immediately what should strike your mind? So there is a reporting requirement under CARO where you have entered into non-cash transaction with the director. We need to check the compliance with section 192 of the Companies Act. Next, though the company's land was nearly twice the size of Ms. Reena's land, it was considered less commercially useful. The exchange was approved by the board of directors and registered agreement was also executed. As an audit engagement partner for Harsh Electronics, what additional audit procedures would you perform in respect of this exchange transaction and what would be your responsibilities from a reporting perspective? So guys, here two clauses will get invoked. Number one, you are having a related party transaction. First thing is you have a related party transaction with the director, no? So regarding the related party transaction with the director, we have clause number 13, right? Clause number 13 talks about related party transactions. So as per clause number 13, you have to comment whether the transaction is as per section 177 and 188 of the Companies Act or not, whether adequate disclosures are given as per applicable financial reporting framework or not. And not just that, as I have just now told, even we have clause number 15, which is talking about non-cash transactions with the directors, where we need to check compliance with section 192 of the Companies Act. So you will have reporting requirements under two clauses. One is related party transaction and the other one is non-cash transaction with the directors. So both the paragraphs, you have to fulfill your reporting requirements. Under both the paragraphs, you have to fulfill. Right. Next. Next question. Yeah, this one. Kuber Tech Solutions Limited is in the process of finalizing its financial statements for the year ended 31st of March 2025. The company is required to present comparative financial statements, including figures for the year ended 31st of March 2024. Roshan & Co Chartered Accountants has been appointed as the statutory auditors of the current year. So the moment you find the comparative financial statements, last year's data, SS710 will immediately should strike your mind. During the audit, CA Roshan, the engagement partner, notes the following. So auditor Gupta and Mehra are LLP Chartered Accountants, Roshan & Co Chartered Accountants. Last year auditor was different. Last year auditor gave adverse opinion. In the current year audit is in progress. Last year why auditor gave the adverse opinion is because there is a material misstatement in the valuation and disclosure of trade receivables, and this misstatement is not yet corrected in the current financial year. Important point to note here. And even presentation of financial statements, figures were presented as comparatives in financial year 24-25 audit, and in the financial year 24-25 they are showing it as a comparative financial statements. Now what they are asking here is what are the duties of CA Roshan while reporting on current year's financial statements considering the prior year's adverse opinion. So guys, here if you have an understanding of SS710, there we have seen that when the last year's auditor's report contains a modified opinion and the reason because of which last year's auditor's opinion contains a modified opinion is not rectified in the current year, then the current year auditor also will give a modified opinion and also he will explain the reason and also quantification in his basis for opinion paragraph. If you remember all that, I'm telling you summary. In the answer, you will be able to find a detailed extract of the respective paragraphs of the standard. But the summary is, if the last year, if you are conducting audit of the current year, but last year's audit opinion was modified. and the reason because of which a last year auditor's opinion was modified, it is still not rectified in the current year, then you need to modify your current year's auditor's opinion, and you have to explain that reason in the basis for modified opinion paragraph. So that you have to fulfill. And one more thing here, since they are also asking one more question, what modifications or disclosures are required in the current year's audit report? See, they are telling it is a comparative financial statements, and they say that last year auditor was different. Now, as per SA 706, on doing the combined reading of SA 706 and SA 710, if last year audit was not conducted by you, you can use an other information paragraph, and in that other information paragraph, you can explain that last year auditor was so and so, you are not the last year's auditor, what report, what opinion was given by the last year auditor, and what is the date of that report, that you have to include it in the other information paragraph. So that is what the change you have to make it in the auditor's report. So use another information paragraph, and in that other information paragraph, try to highlight all this information. Okay. See, but there is a problem with the suggested answer here. So I don't want to complicate the things now, because there is a problem with the question here. Why? Because that first point, whatever I have told in the suggested answer, you will find a solution that if the last year auditor's opinion was modified, if the reason is not yet rectified, you have to modify the current year's opinion also. That is for corresponding figures. That answer should be for the case of corresponding figures. Why? Because if it is a comparative financial statements, you will express opinion on all the financial years. So here there will be inconsistency in the answer. I don't personally agree with this answer. Why? Because they have clearly told comparative financial statements. In the comparative financial statements, you will give opinion on every year. There is nothing required to be stated regarding the past year specifically. But still, in the answer you will find for this A part, they have given the answer as an extract, for an extract which will be there in the corresponding figures. Okay, right. Next, Amar Projects Private Limited, a company involved in turnkey infrastructure projects, in discussion for strategic joint venture with a foreign company. As a part of the due diligence process, the foreign entity has requested a review of Amar Projects interim financial statements for a 6-month period ending on 30th of September 2024 instead of a full audit. To comply with this request, the management appoints CA Tanvi, a practicing chartered accountant, to conduct the review and issue of report under the applicable standards on review engagements. Before accepting the engagement, CA Tanvi is evaluating the scope of the review, the nature of the assurance, and the appropriate format of a review report. Now, what is the question? What kind of assurance is given in a review engagement? So as we all are aware, in the review engagement, we give something called limited assurance, not even reasonable assurance. We will give limited assurance. And how it is different from audit? Simply they are asking what are the differences between audit and review. There will be a table explaining the difference between audit versus review that you have to explain. So in audit, we do detailed audit procedures. In review, we generally do inquiry and analytical procedures only. In audit, we obtain reasonable assurance. In review, we obtain limited assurance. So like that, few differences you have to write. And also they are asking one more thing. What are the key elements that must be included in the written review report as per SRE 2410? Basically, what will be the contents of a review report? What are the contents of the review report? The list of contents will be there. So that contents also you are required to write it here. Next, digital auditing and assurance. Sujal is appointed as an auditor of Kashish Limited, a company heavily dependent on digital platforms for its core business operations and financial reporting. During the preliminary discussion with management, Sujal observes following gaps in the company's IT risk management framework. What are that gaps? There was no recent risk assessment of the IT environment, so they are not doing the risk assessment. There is no documented strategy for managing cybersecurity. The company has not classified its information, which is very much required. There are no clearly defined roles for CISO, CIO. What are their roles? There is no clear definition, and even there is no discussion with those charged with governance. So as an auditor, what should Sujal's first step to be in response to the above mentioned observations? Nothing but they are talking about here cyber risk security framework. So in that cyber risk security framework, the first step is what? What is the first step? Is to identify the risk. So if I show you the concept notes here, see here. So cyber security framework, in that what is the first step? Identify the risk is the first step. In the identify, what and all we have to do, like while entity is doing the risk assessment, they should even consider cyber security risk, and there should be periodical risk assessment, and there should be a proper documented strategy. They should maintain inventory of assets, and also they need to classify and prioritize their information assets, and they need to clearly define their roles, like what should be the roles of CIO, CISO and all, and even they have to be discussed with the management. So this is what has to be done in the first step of the cybersecurity framework. This paragraph exactly you have to reproduce it in the examination in case if they test you this question here. Right. Next. Group audits. CA Rajul has been appointed as the statutory auditor of the consolidated financial statements of NEMI Limited for the financial year 24-25. The moment you read the consolidated financial statements, this is a group audit related question. The consolidated financial statements include the financial statements and financial information of 9 subsidiaries, all of which have been audited by other auditors. Out of these 9 subsidiaries are there, none of them is audited by the principal auditor. For every entity, there was a separate other auditor, component auditor is there. They have submitted their reports. On the basis of that, the auditor of the consolidated financial statements is giving his report. The management of NEMI Limited has provided CA Rajul with the audited financial statements, financial information, and audit reports of these subsidiaries. The following summary information pertains to these subsidiaries for the financial year. So these 9 subsidiaries are there, no, which were not audited by the principal auditor. For that information, they are giving total assets 2,200 crores, total revenue 1,400 crores, net cash outflows is 25 crores. This is the total information of that 9 subsidiaries which were not audited by which was not audited by the principal auditor. Now, why do you think they are giving this information? Because if you remember one point, if you are giving your audit report, in your audit report, you should mention the number of components which were not audited by you. And you should not just stop with identifying the number of components which are not audited by you. You should also quantify the financial metrics, like what is the total assets of that unaudited branches, unaudited components, what is the total revenue of that unaudited components, what is the total cash outflows of that unaudited components. That quantification you have to do. That's why they are giving you these details. Out of the 9 subsidiaries, 3 are located outside India. Their financial statements have been prepared in accordance with the generally accepted accounting principles of their respective countries and audited in accordance with the auditing standards applicable in those jurisdictions. So out of these 9 subsidiaries, 3 such subsidiaries are there which are outside of India. And these 3 subsidiaries financial statements are prepared as per that country's framework and audited as per that country's framework. Now, can they be directly consolidated? No. Now, what management should do? So, this holding entity, what they should do is these subsidiaries financial statements, which are prepared as per GAAP of that respective country, they should do adjustments in order to make them compliant with the GAAP of India. The management of the holding company, the management of the client, they have to convert, they have to make adjustments to the financial statements of that foreign subsidiaries in order to make them compliant with generally accepted accounting principles in India, and they will do all that adjustments and then they will consolidate. And here as an auditor, you are required to verify whether the management has done all that adjustments to make the foreign subsidiaries financial statements compliant with the GAAP of India or not. That even adjustments also you are required to see it. How should CA Rajul report this matter in the independent auditor's report on the consolidated financial statements of NEMI Limited for the year 2024-25 in accordance with the applicable standards on auditing? Also draft a suitable paragraph. Very, very important. They are not just asking you reporting requirements, they are asking you to even draft it. So as you could see here, they have extracted they have given you entire drafting. Right, very important. I would request you to please refer to this ones. Like as you could see, other matter paragraph will come. In that you will say that you did not conduct audit of 9 subsidiaries, not just a number. You have to quantify what is the total assets, total revenue, total cash outflow. That's why they have given it. And you have to say that you have completely relied on reports given by the auditors. And also you should say that, see this statement, you are giving this report purely on the basis of the report given by such auditors. And now you should talk about the subsidiaries which are outside of India. 3 of the subsidiaries are outside India. And for these subsidiaries, the holding company's management has converted the financial statements from accounting principles generally accepted in their respective countries to accounting principles generally accepted in India. And we have audited that conversion adjustments. So like that, whatever I have given you the explanation. So all that you have to keep it in your other matter paragraph. So you have to definitely refer to this question once. Very interesting question. Then coming to the next question. Yes. Special features of audit of banks and NBFCs. From that we have a few questions. Let us see. You are auditing the branch operations of XS Bank, a scheduled commercial bank, for the year ending 31st of March 2025. During the audit of the loans and advances portfolio, you observe the following. What are they? Number 1. Advances were sanctioned without proper credit appraisals. Certain loans were sanctioned even without adequate documentation. So there, without appraisal only you are sanctioning the loan, or you are not maintaining proper documentation. In several branches, securities are being held by a single officer. No, it should be under a joint custody. A few loan accounts have exceeded the sanctioned limit. So what is missing there? Internal controls are missing there. On pointing out the above, branch manager replied that they rely on their internal control framework. When these internal controls are these worse, but still the branch manager is saying we rely on our internal controls. Based on the above situation, explain the internal controls. They have given so much of information. I will say even if you ignore all the facts and read the last line also, you'll be able to write the direct answer. Simply they are asking you what kind of internal controls should be there in the area of loans and advances by the bank. Straightforward question. If you ignore all this content also, still you will be able to write the correct answer. Understood everyone? Right. Now proceeding further with the next question. Geneva Technologies Private Limited, a private limited company which is engaged in the manufacturing of automation equipment, having turnover of 210 crores during the financial year 2023-24. Additionally, the company has taken a loan of 95 crores from a consortium of banks during the year, which remained outstanding as on the balance sheet date. See here, the question will be, they will ask you whether these entities are required to comply with internal audit. Purely they are asking you whether these companies are required to comply with internal audit or not. See, it is a private limited company. For a private limited company, we have two conditions. One is turnover based condition, the limit is 200 crores. The other one is borrowings related condition, the limit is 100 crores. In the given case, borrowings are 95 crores only within the limit, but their turnover has exceeded 200 crores of limit. So that's why they will be required to make a compulsory appointment of internal auditor. Next, meanwhile, Cross Buildcon Limited, an unlisted public company involved in real estate development, had the following financial details for the year 23-24. What are they? So they have a paid up share. Now it is a public company, unlisted. If it is listed, straight away we will say internal audit is mandatory, but it is an unlisted public company. If it is an unlisted public company, four conditions we will have: deposits, paid up capital, borrowings, total revenue. So 25, 50, 100, 200. These will be the limits. So if you see here, paid up share capital is 48, yes, well within the limit. Turnover is 198 crores within the limit. Outstanding borrowings from a bank 110 crores exceeded the limit. Outstanding deposits 30 crores, that also exceeded the limit. Since two conditions have been violated here, this company is also required to make an appointment of internal auditor. Next, one more question also they ask, state who can be appointed as internal auditors. As we all know, a chartered accountant whether in practice or not, a cost accountant whether in practice or not, or any other professional as may be decided by the board of directors can be appointed as an internal auditor. Next one. Navyam Limited is into the business of construction for the past 20 years. Management of the company came to know that building materials sent to construction sites is of substandard quality, whereas the payment released by the accounts department of the company is on the higher side. Forensic accountant was asked to carry out the detailed investigation. Forensic accountant completed his investigation and now preparing his report. What are the broad areas of information that needs to be incorporated in the report of forensic accountant? So what information is required to be included in the forensic accountant's report? Straightforward question from the material. So you can find direct answer there. So what will be the contents of forensic accountant's auditor's report? Next one. Next question. Skin Glow Limited, an e-commerce company dealing in skincare products, promotes its newly launched cream on its official website as 100% natural and chemical free. However, a review of the product label reveals the presence of artificial fragrance and preservatives. They are not giving the genuine information to the customers. They are using artificial fragrances or artificial ingredients, but still on the product they say that this is completely 100% natural and also chemical free, they are saying, which is actually not delivering the proper customer value. And a customer who notices the same tried to complain, but there was no proper complaint form or helpline available on the website. There is no way to reach out to the company. Proper grievance communication mechanism is not there. Additionally, the company's website states that its primary business objective is to offer useful products and services to customers in exchange of reasonable profits. With reference to principles of BRSR framework, identify which principle is being referred to in this case. So which principle they are referring. So as we all are aware, in in that BRSR framework, we have 9 principles. This is something which is relating to the 9th principle. So if you have a look at the 9th principle, this is what the 9th principle says, which is dealing with provided value to the customers in a responsible manner. And particularly here we have various aspects. Keeping in facts of the question, which points are violated here is this one. So which are the specific things which are highlighted in the question that I will show you. Yeah, this one. When advertising about their products, the organization should ensure that misleading and confusing information, as per principle 9, this is one of the important aspects. When you are advertising your products, you should not give misleading information, but in the given case, it is a clear-cut miscommunication. And also this one, business enterprises should make available transparent and accessible grievance redressal and feedback management system. That is also missing here. They did not have a proper grievance system for communication. As they have told in the question, a customer wants to communicate, raise a complaint, but there is no way they can reach out to the company. So that principles of principle 9 have been violated. Next one. Then comes the next one, professional ethics. From the professional ethics, we have some important questions. This BRSR, this I have regarding BRSR, there is one recent ICA council decision is there. If you are a statutory auditor of the company, you can't prepare that BRSR report, but however, you can provide advisory services with regard to the BRSR report. That means you can be a statutory auditor and you can also give assurance report on BRSR. But you can't be a statutory auditor and also prepare the report of the BRSR. That you can't do. You can do a statutory audit and also provide assurance on the BRSR. That is both permitted, but doing the statutory audit and also preparing the BRSR related data, both are strictly prohibited. So this was recent council decision, and from this recent council decision, they have framed a question. So if you see here, CA Sahil is a statutory auditor of Greenway Limited, a listed company falling under the top 1000 companies as per market capitalization on the stock exchange. The company is required to submit its BRSR as per SEBI regulations. Greenway Limited approached CA Sahil to prepare the BRSR study report. They are asking their statutory auditor to prepare the BRSR study report. Cannot do it. Additionally, the company requested CA Sahil to also provide assurance. This he can do. He can be a statutory auditor and also provide assurance on BRSR. But they are also asking him to prepare the report. That is violation. CA Sahil, being confident in his knowledge and expertise in the sustainability reporting, agreed to both the roles. Preparing the BRSR study and providing assurance on the BRSR core. So can he do it? No. This I want to take you through the answer. Why? Because recent council decision, huge chance of getting tested in the examination. So as you see here, as per the recent decision taken by Ethical Standards Board of ICI, it is not permissible for a member in practice who is being a statutory auditor, to prepare BRSR report study to audit claims. However, he may provide advisory services. He can't prepare, but he can provide advisory services like assurance. So it is permissible for a member in practice being a statutory auditor to be a assurance provider of BRSR. That is permitted, but preparing the report is not permitted. So conclusion is what? In the given case, Greenway Limited, a listed company, is required to submit BRSR as per the SEBI regulations. The company approaches CA Sahil to prepare BRSR study and to provide assurance. CA Sahil accepted both. In view of the above guidance issued by ESB, it can be concluded that CA Sahil's acceptance of assignment to prepare the BRSR study is not permissible. Providing assurance is permissible, but preparing the report is not permissible. Important. Next one. R&Co, a firm of chartered accountants, received 2 lakh rupees as advance against a professional service from a charitable institution. Additionally, the institution entrusted 10 lakhs to the firm for the specific purpose of investment in designated securities. The auditors deposited in their savings bank account and no investments was made. Direct question: if the client is giving you some money which has to be spent for certain purposes, you have to keep it in a separate bank account and use it only for intended purposes. If you fail to do it, you will be deemed to be guilty of professional misconduct as per second schedule part 1 clause 10. Yes, here the chartered accountant in practice, he received the money from the client to invest in securities, but he has kept it in his savings account. He did not keep it in a separate bank account. He will be deemed to be guilty of professional misconduct under clause 10 of the part 1 of the second schedule, and he has to face the consequences. That's all, guys. This is what regarding this RTP. Yes, really some interesting questions are there. So please do kindly refer it and attend for the examination. All the very best, my dear students. Take care, prepare well, and do good in the exams. Take care, everyone. Bye.